Hello everyone. Do you know every one of us is a part of a systematic and planned arrangement facilitating flow of money from one who has it, or also called as surplus, to the one who needs it, deficit, in most effective and efficient manner. Can you really imagine every one of us is part of it? Surprised? Yes. We are talking about financial system. To understand financial system, let's understand what monetary terms are. Now, monetary terms have two economic units. These are surplus and deficit. In surplus means someone, an individual, an institution, a corporation, government, any one of this could be a part of either surplus or deficit entity. So someone, any of these who have excess money can also be called as supplier or can be has it in this case which we had just used the statement. The deficit is someone who lacks money. Again, any individual, institution, corporation or government can also be called as demand and needs it is a deficit entity. To understand further, let's use a situation. Let us say that there is an individual who is looking to buy a car, although is in short of money. And there is another institution called bank who is in surplus of money and want to lend to earn interest. So in this case, interest is income for bank. This clearly says that the first individual is a deficit entity. This economic unit is a deficit entity. The second is in surplus entity. Now, this deficit entity need money immediately at lowest possible cost. And this surplus entity want to lend money immediately at highest possible returns. Now, if we have a mechanism by which these both entities can meet and can be helpful for each other, the money would flow from bank to this individual and would suffice its emotional benefit of buying car, and simultaneously this individual would sign the documents and give it to the bank authorizing them that he has taken a car loan. Now this is a very simple example of a financial system. Hindrance in good financial system. Economic units are scattered, so there is a possibility that individual who wants to buy a car could be in another part or another city A and bank could be in city B. It would require a system to actually make sure that these two entities meet. Lack of transparency. Even though A and B or this individual and bank meets, the bank may not realize individual for its credit worthiness. And possibility individual may not know there is some institution called as bank who could give them a loan. The last is transfer and absorption of risk. There is a possibility of default. So let us say after some time this individual pays back 50% of the loan amount. After that this individual defaults. What happens then? Who bears the risk of remaining 50%? So a good financial system must be removed with these constraints. So the process of flow of funds can only be done through a properly designed financial system. I hope you might have a fair sense of understanding of financial system. If you have any queries, post it in comment section. I shall definitely revert over there. Thank you for watching the video.